This is a non-custodial wallet. I have some Swiss francs in it. Now, I would like to pay Morten, because he paid me my beer. Now, the traveler rule applied to non-custodial wallet would require that we report that transaction, and that's just crazy. It's totally crazy, but it's in fact right now the European Parliament is in discussion of doing this, and there was a kind of a subcommission that actually said yes, even transactions between non-custodial wallets need to be reported, and that's completely crazy. So, what's the optimal solution in my view? It's the same as with cash. I don't have to report if I pay Morten, but if I bring more than 10,000 francs, or in Switzerland I think it's 100,000, I don't know anymore, to the bank in cash, they have to ask me question. If I go to the bank and say, okay, give me 500,000 in cash, they have to ask me question. Right? That's the correct thing. You have to control the entry points. But once you are in the system, you don't want this traveler rule to be applied to every transaction. And I think this is we have to just regulate it in the same way as we regulate cash. And that's a sensible regulation somehow because at some point everybody needs to get, you cannot just live in metaverse, right? At some point you have to pay, I don't know, your beer and your rent, and so we get in and out of the virtual kind of blockchain world. And at that point, that's where you can control, and I think that's where you have to apply AML and KYC.
But we do want to be paying for beer and rent with stablecoins before too long.
But I don't want to report that.
No.
Right?
Hi, this is Archit, and in this video, I'll be talking about stablecoins and whether or not they are a threat to central bank digital currencies. So let's first understand, what does the word stablecoin means in this world of crypto?
Every day we're talking about a big move in a stablecoin.
Stablecoin destabilized.
The carnage in the crypto world continued today with Bitcoin.
Despite some of the weakness that we've seen in some
Stablecoins are a type of cryptocurrency that are designed to maintain a stable price over a period of time, pegged to the value of an underlying asset like that of a euro or dollar. They aim to offer all the benefits of crypto while attempting to avoid rampant volatility. So another way to think stablecoin will be as a tokenized version of a fiat currency. But how are these stablecoins used in the world of crypto? Stablecoins allow investors to move in and out of different cryptocurrencies while staying in the crypto world. So let's understand the kind of stablecoins. The first one is fiat collateralized stablecoins. Fiat collateralized stablecoins are the first of its kind of variant that you would come across in the crypto world. They have the backing of fiat currencies such as dollar, euro or pound. The second one are the commodity-backed stablecoins. Now the commodity-backed stablecoins have the backing of different kinds of interchangeable assets such as precious metals. The most common of them is gold. The third one are crypto-backed stablecoins. Now, how can you expect stability in stablecoins that are backed by crypto, right? That's perhaps is going to be everybody's question. But as a matter of fact, the crypto-backed stablecoins offer better decentralization than the fiat-backed stablecoins. And this is because without any single entity in control of your funds, it offers you better decentralization. The fourth one are the algorithmic stablecoins. Now the non-collateralized or algorithmic stablecoins follow an algorithm for the supply of the coin. Now what you should know is that there is no collateral involved in the algorithmic stablecoins for liquidity, which means everyone can lose money when it's a crash. Now since we know something about stablecoin, now CBDC on the other hand is a digital money backed and issued by central bank. To know more on CBDCs, do check out my previous video. The difference between stablecoins and CBDC lies in the fact as to how they are used. Now most stablecoins are used to facilitate investments, whereas most of these CBDCs are envisioned to facilitate payments. Now globally, stablecoins are being seen as a threat to sovereign currency, and CBDCs, when it gets launched, are being seen as threat to stablecoins. But can CBDC and stablecoins both coexist? Or will CBDC, when launched, can kick out the stablecoins of the crypto ecosystem? Now, CBDCs can be minted on private ledgers and maintained by financial institutions. Now, central banks are accountable for ensuring the security. Now, stablecoins are issued on public blockchains by a company, which allows individuals to operate nodes and smart contracts, lending the utility of stablecoins to DeFi, but without the same protection. So let's look at the scenarios which might happen in the future. So the first scenario is stablecoins win and CBDCs lose. Now the obvious advantage of stablecoins is that they exist or at least further along with the CBDCs. Now the second scenario is CBDCs win and stablecoins lose. Now most of the people believe that CBDCs, when it gets launched, are going to kick stablecoins out of the crypto ecosystem. For example, Tether's USDT and Circle's USDC are both linked to US dollar and aim for 1:1 peg. Now imagine a world with US dollar as CBDC. Then the need for these coins just go away, because then there will be a crypto alternative which is always backed 1:1 by dollar and is interchangeable with fiat equivalent and is also a much more secure option. Now the third scenario is if there's a tie between CBDC and stable coins, which means they coexist. Now, their coexistence depends a lot on policies and regulations, whether the government specifically allows stable coins for payments, especially in the cross-border context. Now, some people also believe that introduction of CBDCs may boost stable coins too. Now, by the time CBDCs gear up for their launch, regulated stable coins could provide us with the solutions that a CBDC was once designed for, such as boosting financial inclusion, cutting transaction cost, and settlement time. Now, scenario 4 is going to be a draw, which means nobody wins, which means none of these innovations work, which is least likely to happen. Well, at last, I would just say that in terms of market adoption, the user experience is going to be the key. So I'll end this video right here, and in case if you feel that I've made you aware about stablecoins and CBDCs, then do subscribe to this video and you can connect with me or follow me on my LinkedIn page for more discussions. Till then, thank you for watching.